Right. So, yes, Leo. So, I think we'll kick this off now. Welcome everyone to our webinar on hot stocks for SGX, KLSE, STI, KLCI index analysis. Though it is a very right time uh, to visit back to the index and visit back to uh, the things, how are they going on in the equity markets, where we are seeing continuous downward momentum. And it is, why not, it should be, because there are some fundamentals that have changed in the last couple of weeks. And you could see the intensified selling and uh, you can say bearishness in indexes across Asia, if not the world as well. So, our today's analysis will be having a higher weightage to index, because past couple of rate hikes from the US Federal Reserve, there has been a lot of capital outflow from Asian equity markets, and we are seeing a kind of um, deleveraging. So we'll discuss all these things, and then kick off the other things. So I hope every one of you, I think many of you are part of this webinar again. So these are quite different terms used to describe a personality who is investing. I think most of you are active trader, investor, or just trying to hear to gauge the sentiment of the market. But then as well, you need to understand what trading is and how it differs from gambling, bet, or luck. So I used to keep it just to remind the traders, it's not just I'm putting it here, I have it in my trading bay as well, where I am looking at screens and it is there as well. So this is something you must be knowing, that you are a trader and you are there to capitalize on the existing trading capital, and nothing more or nothing less than that. So going forward, these are the strategy as per market trend, bullish or bearish. But I've explained it previously as well, that there are traders, they will set weekly performance targets. Such an approach is dangerous. You have to stop thinking in terms of daily or weekly returns. So there is a short-term trading, there is a mid-term, and there is a long-term trading. Now people who are here right now, this one, uh, needs to be highly disciplined, but nevertheless they forget the possible plan they have, or the rules they have, and the idea that initiated the trade, so they don't put a stop loss. And usually people who are short-term traders, they either turn out to be this, or they are yet again born as this. But these people, they don't come to the first one, as mid-term and long-term have a different skill set and things. So people who are like short-term trading traders, daily and weekly, they must be feeling the heat right now, and they must be understanding what is going on, all the positions in the market. Well, of course, you know how it is behaving, and how things are. As far as Malaysia is concerned or STI is concerned, most of the short-term traders are trapped, or they have a very good holding and uh, yet to see some profit, because the bearishness is very much there. Mid-term traders, I think they can survive, but still I think in last 1 month, the kind of a sell-off we have seen has certainly put some pressure on mid-term traders who do it. Long-term, I think they would be coming in if they are professional and if they are having that kind of a pocket. So they would be coming into shop, but not right now. So without further delay, I think we will move on to a few important things. And okay, just let me set the stage for you guys so you can see what I'll be trying to share with you is something very important for you to see. And that's how we'll be analyzing right. So I'll hand off my screen onto the other so you guys can see. I'll take the questions as well, sure, but at the end of the webinar. And yes, now I'll be sharing the screen. Right, here we are. How many of you can see some charts and KLCI over here? Do hit me back, because I've changed the screen and you should be seeing the particular thing right now. Right. So you are saying something as in Bursa Malaysia right now, and you'll be able to see what I'm trying to share over here. Right. So this is Bursa Malaysia, and this is nothing but this is just an analysis that I'll be. Yes. So right now, if you see the overall index, especially Bursa, you must be seeing this particular lines. I would reduce the volume, and this is the performance of particularly Bursa, and you might have seen that it is in a complete bearishness. I mean, there is not even a slight uptrend. From 1780 it has come down to 1660, and that's in a matter of days. I mean, it was 7th of June and this is 28th of June. Just in a matter of 20 odd business sessions, trading days, it has completed this particular down move. So this is something worrisome. And let's see what is. So we'll look at something as in since 2016 and same month, first date. So hardly makes any difference in the data stream. So we are at almost 2 years low, and given the overall move. So I'll just share it on the chart so that you can. So this is Bursa and KLCI, and so we'll be able to see where it is actually heading. So has been down from 1900. Now what's the possible target, where it will stop, when will the market return? There are multiple questions. So over here we have a very small data points. Now the current wave that is in progress has its dominance of the preceding wave. Now this preceding wave is something right. Okay, let me bring my cursor over here so I can draw it for you. Pen. So all the major focus has been this, and this particular move is actually a byproduct of this particular move that happened here. Now this move was as ferocious as it could be because all the positions were created over this point when the SMA was breached. You see this particular sell-off over here, that was good enough to identify that from 1850 it went down straight to almost 1770. So that kind of a bearishness, and then third big candle over here. So all the positions was created, and the sell-off which we are seeing has a dominance of this. So why not just take what's the probable target of this particular. So I'll just apply a simple projection, and if this is the first wave, then what's the possible target? Sixteen 14 is somewhere you'll be getting the target of this one wave that has happened on the daily. So we have taken this as this one move. If you see why we had stopped over here, why there was a reverter at 1700 levels. So there are multiple reasons, because it was a previous support, it had to come down here, but it had to come up from this level. But then there was a symmetry at that as well, so you can simply look at this, and there was 100% completion here and 161 down here. So if we are beyond that, and so 261 of this one first wave comes at 261 at 1614. Now that happened. That being said, when you look at the second move, and this second move came from 1700, there was an up move till 1800. All being said and done in a matter of days. KLCI doesn't move like that though, and 1614 is the target. So we are getting a confluence at 1614. This market is not probably gonna stop because both the waves are targeting. So overall structure says that it is a very high probability that 1614, 1620 is the next target for KLCI. Now the worrisome part is what after that. It's of course very genuine question, very genuine thought, but what after it comes down to 1614? Now, I don't want to scare you, but this over here is a classic double top formation. Now, classic double top formation is something which you need to be scared off, of course, because the kind of time it has taken to form this particular double top is somewhat 200 weeks, almost. Now, why I'm saying this, because this double top is as scary, because after almost 199 weeks, we have seen it coming down, then of course going up, but failure of at this particular top not being breached is something scarier. Now, on the flip side, KLCI needs to sustain 1614, 1610. It should consolidate, it should sustain, it should reverse. But if we see a possible close below 1602, then I have to say that there are double tops when we have seen previously in the market, and these tops are, quite evident whenever they happen. Now, immediate supports when mentioned for this double top was this particular level. You see the kind of extra sell-off. For this, there was a support at this, and market fell down like this. Now this is a line in, sorry, just mistakenly. This is a line in the sand for KLCI in the short term. Now, a possible correction has always been seen in market. Now, if you look at this, there was a 70% correction over here. Same 30 odd percent correction. Now, given 1620, I don't know, but if I calculate it over here, even a 30% correction is pointing towards 1250 is a 20. So we'll see where is the long-term confluence of support is coming. Now, this is a particular trend line that if you draw. Now, why I'm giving this, because given the kind of fundamentals, if you have seen lately, there has been a sell-off in emerging markets. Now, when I say emerging markets, MSCI, the higher weightage is towards Singapore, Korea, South Korea, Thailand, and some exposure to India. But problematic thing is that a very a small portion goes out to KLSE or Malaysian indices, Malaysian markets. So when we are seeing sell-off in emerging markets like Singapore or maybe India or South Korea, we need to understand that those countries have some holding of the MSCI, or the broader indices are being held, some part of it, from the FIIs or institutional investors. Now, if this particular 1620 is breached, I think there can be another 15 to 20% correction, which cannot be ruled out. This particular things may take time. These particular level may hold on, but if it's out, I mean, it's out. I mean, there is no looking back. Now, we'll simply do one thing. That was a 161 of that particular move, and this top has had a correction. Sorry. So on the basis of trend line, or even the Fibonacci, I mean, this is something important. Now, I'll draw another fib number for you to analyze that in which percentage are we. 33% in a bear market. I think this is the first There can be, of course, 50, 61, 38.2, but I still believe 33 is a number which I personally like. So 33% is a crucial number which one can look at. Now, if you want to check that particular previous uptrend had support being marked between 50 to 60%. So here, uh, if we take fib of particularly last wave that started back in 2000 after 2008, this 33% comes at 1540, and 50% which above which sorry, a trend is positive, it's positive. Below which a trend is negative, it's negative. So that comes at 1350. Now, so the confluence of level is somewhere between 1360 to 1380, and of course 1520. Now this is another number that we have got from 33%, 1540, 1520 for area of support. But nevertheless, I don't mean to scare you. I don't mean to give here bigger targets because I personally believe in trading. So if someone is out there holding on to cash positions, or I would suggest, because personally I would say KLCI is a market where you need to hedge your positions. Now earlier we used to have crude palm oil, but since you have a derivatives, things like KLCI derivative, you can at least hedge the position. If you're long in index, big high weightage companies like maybe public bank or maybe other holding companies or other Sharia compliant companies, but you need to understand that over here hedging is important. Now hedging is you can go and take a short position in index and can hold on to it, because I'm not going to suggest to go and short tomorrow, but of course wait and see where it's taking a support bit, because it's already near 1620. So that's one way to go through. Now we'll go and look at some of the volume analytics over here. So I'll just so it's been since 2009 that we analyzed, right? So we'll do one thing. We'll take through 2009, 1st of June, update my view. Right, so this is a very long-term analysis, and what I meant by index outlook is something very long-term, because we're not seeing markets in a very healthy stage. So that's KLCI. That's almost a data since 2009. So I'll just put one thing over here. There's something called as volume, and it will particularly fetch me volume. Now I want to see where is the money. So that is where the people are heavily stuck. Volume weighted, VAP, that we call a volume at price. Look at this volume over here. 1600, 1700, 1700, 1800, 1800, 1900. So that's where right now the volume is, because we have held election, a lot of people came out, a lot of sector rotation was there, but in the long period from 1000 to 1900, you see the dominance of volume that was between 1500 to 1900. I cannot certainly give that kind of a weightage, so I'll do one thing. I'll look at last 2 years. Now I know 1500, 1600 is a very last resort in the prices. Now we'll see where is the, so right now it's just changed. Now you look at where the volume highly was. Now this was at 1750, 1800 probably. This was at the time when we have had elections back in May, and that's where the level was. Now since that's the level, this is the lower range of the market, 1600 to 1650. Look at the kind of volume this participation, that is very less over here. So still the overall participation that came in, that was at 1750. So let's me look at last 1 year. Pretty much same, but this time 1650 or 1700 had very less participation. Why? I'll tell you one thing, because the distribution here seems to have been on the upper price band, because for throughout the year market was consolidating between January to April, somewhere between 1880, 1820, 1800, and suddenly the downward move in last 2 months. So that's why you see a higher weightage on the higher level, while there is very less participation over here. So let me look at a 3-year view, 3-month view, and see 1850, 1900. Mostly people are there, and I still believe that a lot of people are stuck on the higher side, while it has been purely a sell-off that has been there in last 1 month. See 1760, 1740. So that's a next resistance for the prices. If you see, that will be somewhere people are stuck. 1720 there is no, and then there is 1740, 1760 was somewhere we have seen in last one and a half month. So that is KLCI for you, and I mean, I would still suggest that don't go on and open your shopping bags right now, because the things might get worse, because these are not something signs where you see big money would come in, until unless there is a deeper correction when the pain is very extreme. I think then is the time, and it's something you must see what happened in the, you see the sell-off has been very extreme. It takes hardly 1 year, hardly 1 or 2 years to erode all the capital from the market. You look at this particular market that started in 1988 to all the way 1995, and this top in 1998. That was a particularly, of course, everyone would say 9-year cycle, 10-year cycle, and it came to those kind of level, and in just 1 year, right? Same pretty much here, 1998, 2008, right? So now I hope what I'm trying to say, that which cycle is in effect. This is 2009, 2008, this is 2009, this is 2018. You almost have 10-year. I hope this is now something clearer to you. So I'm not trying to scare you over here or give you very deeper targets which may seem illogical. This is market, anything is possible, and given the kind of a pattern, so certainly from this particular place where market made, this was the first cycle, this was the second cycle, this is after 2018, 2019 is the, so you have to be prepared for it. If you are holding a large majority and chunk, and especially those penny stocks, those illiquid with the bad fundamentals, I would certainly, if you're holding something as public bank or something from consumer durables, something as Nestle, there is no problem in it. But if you think you're holding some company that is going to improve in next 2 years, then you have to rethink again. Sorry, and you have to rethink on the fundamentals of that company. Technically, we are is still seeing some weakness in the market. If you have any questions related to specifically KLCI, so please ask, and uh, I'll try to take on the STI as well, and certainly STI is important because uh, it's what actually leads in the overall. So I hope KLCI is clear. I don't think there is much to explain. I've given you very clearly the possible scenarios. That was 1988, that is 1998, 2017, 97, 98, another 10 years, 2008, 2009, 2018, 2019. You have to be very. So I'll take STI over here, and then we'll discuss that. So before moving on to STI, I'll share iShares Malaysia, one of the ETFs. Right, this is the particular index that we will be looking at. This is broadly uh, tracks the Malaysian market, and uh, has been one of the markets that has almost holding of 48 shares. Those are benchmarked in Malaysia, trades on the NYSE. So something you need to know, because this is how global markets want to look at Malaysia, and of course with KLCI. So it has breached its crucial supports. Look at this gap. This gap may be filled. These levels may be used as consolidation, but there is a very high probability these needs to be sustained. If this is sustained in coming date, it's all right. Otherwise, these are the levels that can be tested. So just for your educational and study, if any one of you look at markets and want to track or needs to see what has been there in the market in last few days, how it is going and when it will go up, so I would suggest you to look at iShares, because this is particularly an ETF that has a very good characteristic that defines the Malaysian market as an index, because the main holding of this particular has been public, Tenaga, Malaysian Banking, CIMB, Petronas, Genting, IHH, Genting Malaysia, Digi, Maxis, and of course Digi would have weighted higher uh, given the recent election, but it fairly gives out the overall view of the market. So I think it has been down, and if these levels are sustained, we may see some consolidation at 26.6, but even 26.6 gives us another correction of 10%, because it's 30.52. Even I've take out 3.52 points, it is going to give me 27, 26 odd levels, and below this, as I said, things may get worsened. So remember that particular thing. So Hope you remember this chart. It will be a very good question if someone says or ask me, looking at the chart, why is it different from Malaysia? KLCI. Anyone has a second thought on it? Because it has been pretty much same over here. This has not been the same because KLCI should have been somewhere here, while it has been here almost all the way down to this level. You want to see it again? Let's see. My God, all the drawing. Now you would be comparing. See how high is Bursa? So why is iShares down over here? Why it has already corrected? See, that's the true characteristic of this index is it's one of the leading index. So since it's focused on Malaysia, if this goes up, if the Malaysian companies do good, then you'll see an upward move in this iShares index. And of course, then you'll see some kind of a resumption in KLCI. So this is a leading indicator, which has been down since 2014. There is nothing happening in this since 2014. And look at this 2017, 2018. It was up, but it came down like that just in matter of 2 or 3 months. So that's why one needs to track this as well. And I hope I have given enough clues and hints over here and shared enough charts for you to know that things may get a bit crazy in market, but if you are a long-term investor, if you have a value in your portfolio, then you need not to be scared of, because long-term wealth appreciation is always there. But then if you are a short-term or mid-term investor and just bought on the hopes, I would suggest you need to rebalance. You can reach me at lsharma@epicresearch.sg or lsharma@epicresearch.in, L for love, and I would be happy to reply to your portfolio. So you can contact me on through mail on that particular mail ID. I'll try to address the particular holdings that are good or that are bad, and then we'll move on to STI. Hope people are here from Singapore as well, and of course they're looking at. So nevertheless, this particular index, like for example, I've shared iShares for Malaysian market. This is a barometer for me. For me personally, if I want to look at where is reversal in the prices, or which index is leading, which is not, or when is the money flowing into Asia, I look at STI because the kind of a depth it has is really appreciable, and I would personally look at this particular index. I'll just give you an example why, because this was a particularly last swing, right? When did it bottomed out? That was 5th of February 2016. Now look at, and it all the way came up to 2800, 2500 in just matter of 5, 7, 8 weeks. It gave almost up. So that was 2 months, right? February 2016. Now I'll show you why it's a leading index. Now this is Bursa. You look at this. February 5, somewhere here, right? Same index was in still a range 1655 to 1623 till when? Q4 of 2016. So it was not moving, and then we have seen the money coming into the market. So If not true, the positions were created in this particular base. Now, Malaysia as a market has a very high ratio of noise, so that's why it takes this much of time. But if you look at STI, the noise is quite less given the overall dynamics, and see, so it was one way street for prices to move up. So let's look at this particular index. Sorry. So this is a monthly chart, and I like to draw Fibonacci retracement over here. So for this uptrend to remain intact, it needs to hold 3080, 3100, because 50% marks the overall trend movement. You look at this and you'll understand that initially, and then it went below, so a closing below it or above it. So in last few years, it has sustained its previous corrections of 33, and then see 50% there was sustained. But we need to see if it is able to sustain the 50% correction here. We're still far from this, but the kind of sell-off we have seen, and this is a busted double top. You look at this, and that's for the false breakout. False double top was formed, and so that's the very high probability for this to go over here and complete the pattern, because certainly if not prediction, let's not predict what will be happening. Let's get back to normalcy and see what's the trading range. So I'll try not to that's on the higher side since 2011 without a doubt. That's on the lower side. That's the trading range. Simple as that. There is no if and but, and there is no confusion since 2010, 2000, early 2000, late 2010, early 2011. Broadly has been in that kind of a move. Now let's check out. Since this up move from 2011 went till 2013, the correction was sustained. Double top formation, right? That's a double top formation. I'm not saying that that's the pattern. Now, this is something first that comes at 50%, right? Look at this. Previously, that was in 13 and 14. These levels were being held 30, 40, 30, 50. So it needs to sustain this level. If it's not, then we know that we have another correction coming into 2700, right? So both of the indices are pointing out the same thing, that if we talk about Malaysia, we have seen 8-9 years of uptrend, then 1 or 2 years of correction. Same is pretty much in, and we have completed that. We are in the process of that in Malaysia. And same is with SGX. You look at this particular pattern, there is no confusion about it, that until unless this is between this particular range, you know where it will go. So it might come to 50%, sustain, move back to 33%. It can take support over here, can consolidate, and can go to 36. But you know the overall pattern, that until unless if it's not above 3600, you are not buying SGX, and you certainly want to take out any short term you have bet taken on the basis of bullish, liquidity, or there are already plenty of reasons. United States rate hike, there is a treasury yield that has sparked off emerging market sell-off. There is a high capital outflow, not just in SGX, but KLSE back here in India as well. There has been a lot of, capital outflow that has been there. and crude prices are at high, and that's something not giving a comfortable situation to emerging markets, or posing a comfortable market situation to emerging market. If you are having any questions, please do put them on the question board, but it must be on the right hand side, because there is a time limit. And of course, um, any holding or any other thing that you have to ask, and you can reach me at L for love, Lesh, L Sharma, SHARMA @epicresearch.sg if you have any queries. And I'm not very honestly giving any stocks, because I have tried to identify it, but it's quietly done automatically. I don't have to uh, give or look at charts and take out my stocks, but that's the possible stocks. Now, all of these are sustained, generated by the system. So if I look at them, you look at the charts, and they are scary charts. I mean, they're having less volume or so, and all the top or big holdings are seeing continuously beaten down. So I don't see any value in giving stocks that you want to hold and make money, because there is a sell-off right now going on, and going against the market is something I would not even recommend you to. So this was Padini Holding, and it came up as one of the stock from the, and simply for one reason, because it was in an upward move, and this was Alliance Mineral. Padini was from Malaysia, and Alliance Mineral is something which has been in a consolidation despite a sell-off, and I'm seeing it as one of the stock that is growing up for another upward move. But I would recommend, to have Alliance Mineral in Singapore. If someone of you trade STI above 0.390, it can be hold on to. The target should be 0.45, strict stop loss of 0.31. That is Alliance Mineral in the Singapore Stock Exchange and STI, and it's above 0.390, and can be bought for a gain of almost 10 to 15%. And the second stock is Padini Holding. It's a bit costlier, but then it's better to hold value because the stop loss is very small. The risk is of 5.5, 5.56, while overall pattern suggests there is a bullish flag breakout, and should march higher to 6.2 to 6.3. So those are the two stocks, and one can look at Padini and Alliance Mineral. And that was my analysis on KLCI. Has been very crystal and clear. You need to be, not to be scared, but you need to be cautious in your approach, and certainly we'll meet again, and I'll try to inculcate a lot of other things. How, like for this time, we have shared our shares MSCI. It's for retail investors who want to track, and this is one of the leading ETF that one can look at to track Malaysian market, while Straits Times itself is a leading indicator for the Asian markets. So that is me, and I hope you have had a great time. I've shared my email ID, and you can reach out to me, and we can look at things, and thanks for being there in this webinar. We'll meet again in next webinar with some other topic.